JB here. Hold on for the back feed 1 second. There we go. Hope everybody's doing outstanding. Friday, December 19th, 3:42 on this fine afternoon. Really quick rant here as we head to the close. Talk quick about the market. Some names I'm looking at go from there. S&P has been pretty much flatlining at the 680 level since about 11:45 or so today. So pretty much a quiet session after about 11:15 or so. And a good thing, right? All things considered, uh, at the middle of this week, you could have said, okay, we're on the cusp of some crazy AI monster meltdown. We got through Oracle and Broadcom earnings last week, but then it just seemed like it wasn't enough, right? And then there was still some fears and concerns. And we had, uh, the CPI data come out cooler than expected. You thought, okay, that would be the next leg, and then Bears came in a little bit a couple times on yesterday. You thought, oh, here's another chance for them to take control. And here we are, Friday afternoon. It looks like anything besides any crazy pull in the last 17 minutes. The S&P is green on the week, just barely. So hopefully holds here, and some good stuff to talk about over the weekend as opposed to talking about stocks under their 50-day moving average. They keep talking about Oracle, CDS, credit default swaps. They'll be talking about all these different negative, bearish things. And it's always good to have both sides of the story, right? You don't want to just be thinking that everything's rosy and the market's just going to continue to ramp. Obviously, there's things to be worried about, but to see markets holding up here, I think the scenarios, and I've a lot of talk this week, the scenarios of a crash like a bubble, 2000 style .com bubble style. I think that's kind of off the table, but you never know, right? The thing is just to be, if that does happen, be in a scenario where you don't get killed too much on the call side and you have positions to make money on the downside. So with that being said, take a look at the SPY here today over the 50-day. 679 is a key spot. Divvy day for SPY was, I think it was 199. So, but that 679 is still a level. And next week is Santa Claus rally season. So typically, I was saying this morning, it's not a defined time frame, but typically it's 5 days before the last 5 trading sessions of the year, and then the first two of the new year. So, SPY just broke under 680 here as I'm speaking. So, knock on wood here. So now the S&P. Let's see. I can tell you exactly what it is right now. The SPY is down exactly flat, plus 0.03%, point zero three on the week, 0.0000% right now. The SPY is exactly flat. So. All right. So anyway, that's next week, and maybe there's some fun to be had, especially over this week. I'm going to try and look at some names that have been oversold heading into the last 2 weeks that might offer some opportunities on bounce side. And I just added Trip a little while ago. That's a name certainly screaming attention to me. All right, so that's overall market. So just quick on individual names. So SanDisk was driving me nuts yesterday. Ever since SanDisk came to my attention, I don't know if it was a $120 stock. I forget what it was a couple months ago. It's one of those names that looks like it's undergoing price discovery, right? And when I say price, it's like the market doesn't even know if it's a $300 stock. Is it a $200 stock? It's still relatively new, spun off of Western Digital. So it's still in its early stages. I should say early stages. It's spin off happened a while ago, but it still seems like the market's still trying to figure out where it should be priced, especially relative to the other names in the space. I posted, when I first started looking at SanDisk, it's tough to, obviously, it doesn't have a lot of historicals. I think he had four filings, but 4 quarters. But it's if you start looking at its just top line, like the easy first glance stuff, it trades at 4 times revenues. Where some of these other names in the space, when I first started looking at it, it traded 3 or 2.5 times revenues, where a name like Micron was trading 7, 8 times revenues. So it's not an apples to apples comparison, but it kind of, if you're trying to look for possibilities of a stock maybe undervalued or should outperform the sector, that could be one ingredient to that, right? And then you look at the other names of space, the Seagates, the Western Digitals, also the same. I think Western Digital like four times, Seagate's like 5, 6 times. So to me, if anything, it just means, okay, when I look at it and you see, obviously it's up a heck of a lot this year, but maybe there's still more gas in the tank. So when I was looking at the Micron earnings, when they report earnings Wednesday after the close, just a commentary around it's like they can't meet demand, right? They don't have enough, right? They don't have enough of supply to meet demand. So when you have a market like that, it makes for crazy opportunities. And then you have the pricing component that, people talked about. The reason SanDisk have moved up a lot recently is the pricing power, the pricing of memory going up substantially. Who knows when that ends? Who knows when the price discovery ends? But to me, the result or possibility here is an opportunity for it to trade to 300, right? As crazy as that sounds. So with that being said, I'll probably continue to look for opportunities to get spec calls if I find decent risk reward strikes. I was looking yesterday after the Micron earnings. I'm like, wow, this might go. I was looking at 250s, but then it turned around all the way down to 220. I didn't want to be in a spot where I was paying a high premium, so I waited till today, and boom, it's off to the races in the morning. And I put in the chat room the 240s looked expensive, right? Or at least pricey. But then it kept rallying. So I didn't want to be in a spot where I missed out on the move because I think it trades higher in the coming weeks. So I was looking at weeklies. I'm like, let me roll it out to next week's strikes. At times you think it's $40 out on money. I think it was 230 when I got the strikes, but I got those 275s. But it's not like I need it to get to 275 next week for the calls to pay. I just need it to continue to rally. Maybe 250, 260 Monday, Tuesday, and these will be up substantial. But use the opportunity on the move up to close some of the calls out for close to 100%, and then it continues to go, close more out for 120%, and I'll just hold the rest. Have a few profits, the rest are free, and it takes the emotion out of trade. And not only that, so it was all the way at 243 earlier, and then it drops all the way down to 235. Normally, like if I only had one or two contracts, I probably would just pull the ripcord, right? But especially if markets find footing next week and we have the inklings of some kind of Santa rally. Heck, I would just take a Santa pancake, right? Just a flat market. I think it trades higher next week. So I'll continue to hold those. Not only that, I dare I say tight pincher. And it's not the tightest of pinchers, but the Bollinger Bands are tight here. So that typically precedes a large move. It's remarkable stuff. It's up 8%. You look at the candle, and it's like the candle's not even that big on the daily chart. All right, so that's SanDisk. So nice trade there today. Another names I was looking at in the morning, I was looking at Oracle, and the 195 strikes like 40 cents. And I'm like, oh, they look expensive on a risk reward basis. And boom, next thing you know, it's at 195, and those were $1.80. At least I knew the opportunity was there. Unfortunately, I didn't pull the trigger. And I was trying not to be too aggressive because I still think we're still in a market, or at least yesterday and today, where the bears could use some of these gaps as opportunities to instill fear and then just have some follow through. So that's the reason somewhat of why I didn't get the Oracle strikes. But similarly, I was looking at Oracle for next week, and the 210 calls are like 70 cents at times. They dropped down. I think they're 40, 50 cents now. I don't know if I'm going to get some calls in next week. I'm not looking at Oracle as like the next big growth story. Maybe it is. I'm also not looking at Oracle like it's going to default on its debt and go bankrupt and be the part of the circle jerk that causes the AI bubble to blow up. I don't. Who knows how this all plays out? But I mean, take a look at it now, and I think there's going to be opportunities to play for a bounce. So not going to add anything into the end of the week, into next week, but maybe Monday I'll take a look at Oracle, which brings me to Trip. So, TripAdvisor, one of my favorite stocks over the years. I think this time last year I wrote a nice bullish piece. I'll see if I can find it. It's just a great story. It's still only a $1 billion company. They have like $800 million in cash. They have an active stock buyback program. They have three segments, and these are acquisitions that they made back in 2014, 2015. Viator, which is like an experiences platform. And then they have the Spoon, which is kind of like an open table, which I'm not going to go on a rant. I don't have enough time, 10 minutes to the close here. But needless to say, those segments alone are worth more than the company. If they just spun off Viator right now, it's probably like a 1.5 to $2 billion valuation, right? So the stock is a 1 billion market cap. So obviously substantial mispricing to the overall market, in my humble opinion, right? And that doesn't include the fork, and it doesn't include the core business. And the core business has been some of the reason why the stock trades down here, because it's not a growth story, right? It's kind of, their growth has plateaued. It's actually been negative. And the Viator and the Spoon has been kind of the fork. Sorry, not the Spoon, has been kind of subsidizing the company, right? Because, well, not subsidizing, but masking the slower growth, because those are growing 20% plus. Finally, the Viator's revenues overcame the core business. I mean, just good stuff. And when I say good stuff, it's not a crazy growth story. It's not one of those momentum names. To me, it's an undervalued name that I think it should be trading into the 20s, if not higher. They've had buyout rumors this time last year. There was a buyout offer for 18 and $20 and $22. They had an issue because their previous holder had put a nix on some buyouts. So Liberty Group, so they're finally out of the mix. So just a lot of, to me, like if I was writing the story from that I wrote last year, this year, fast forward, there's a lot more reasons to be bullish than there were last year, right? So anyway, I got some inexpensive January strikes. Won't take much for this to get going. I mean, you take a look at a pull just from 15 over the last couple of days. You also have that Starboard Capital stake in the company. So they just had a conference. I don't know if it was a month ago where they went out. It was a an activist conference, and they talked about Trip, and the stock was like $18. And here is the third. And then the last part of the story, the wild card, is since the summer, the short interest has doubled. It used to not be a short story, right? It used to not be a bear story. I don't know if someone's going to come out with some bear piece on Trip. Maybe that's it. Maybe that's why it's got the short interest, but it's got a 22% short interest now. It never had that huge a short interest. And sometimes people look at short interest, and sometimes you don't want that overhang because maybe someone has some information that that they can hit the mark with. I don't know. But to me, sometimes when there's a huge short interest, it means someone's got the story wrong, right? And I think they have it wrong. So that creates opportunity for massive upside move when the stock gets going. So we'll see if we can squeeze some shorts here on Trip next week. Have plenty of time on the January strikes, and then if it has some follow through next week, I'll add some more strikes for a move. I think it's a 20 plus stock, right? It's sitting here at $14. So obviously there's opportunity, but who cares where I think it trades, right? It doesn't matter. The only thing that matters is where the market price is it. So I can sit here and tell you it's a $50 stock, just like what's his name does on Open, saying it's an $84 stock. Hey, maybe he's right about it. Maybe he gets there. But anyway, that's it. We got 7 minutes to the close. Little quiet week this week, thankfully, right? There's weeks like that you have phenomenal weeks. You go every trade, it feels like you can't go wrong, right? And then the worst thing to do is to take that mentality and start doing it again, and then you just get absolutely demolished, right? And this is one of those weeks where there's been swings. I mean, how many times I was trying to get lemonade calls, Roku calls last week and this week. I was trying to trade Reddit off and on all the last couple of weeks. Well, not the last couple of weeks, but the last couple of days. And thankfully, I just sat on my hands for some of these trades because otherwise there'd be a weekend where I'm, a little more upset about some of the trades. Oh, last but not least, the cannabis space, CGC. What are you gonna do? I think it's down 13% this week. Locked in the freebies. I'll continue to ride those. And that's it, folks. Have a great weekend. I'll be back. We're rocking.